Good morning, everyone. Microphone check. Screen check. Hey. Looks like everything's working correctly here. Welcome, welcome, welcome. Good morning, SSFTG family. I hope you all had a chance to rest up, get ready for the day ahead, all that fun stuff. As per the usual, make sure to read through the morning prep PDF on the right side of the screen there. Very important to understand everything that is inside there. Also, just a quick note for you all before we jump on in today, if you're watching on the YouTube side of things, the stream does have between a 5 and 30 second delay or so, which will definitely impact the timeliness of what I may be talking about at any given moment. Good morning, good morning. Welcome, welcome, welcome. Oh. Man, I don't know. Yeah, I don't know what we're going into this morning. Good morning, Stephen. Welcome, welcome. we've got a I don't know. We've got a fun ride in front of us here. Anyway, just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm super pumped to have you all on board as part of the SSFTG family. If you aren't a member yet, you do have a few different options to check out if you are looking to further your trading education and career. One of the easiest ways to jump on in the family is right here on YouTube. You can check out the join button below the stream, which gets you access to our extended hours room, where we continue the morning session room with less delay until the end of the session, usually around 10:30, 11 o'clock. YouTube members also have access to the communities area, where I post all kinds of different chart setups, stock charts, analytics, and more. And of course, every member gains access to the Discord chat server, and you get the awesome badge next to your name here on YouTube to show your support. The best part is it's $5 a month, so you skip a coffee at Starbucks and you're set. If you want to take a massive step further, though, in understanding our trading approach and what it is that we're doing here every day in the room, look no further than the Day Trading Academy. This is where you can learn how we do everything. But listen, this isn't a small PDF guide that you're going to finish in an afternoon, all right? Yeah, we do have a quick start guide. Yeah, and congrats to the winner as well. We just did the announcement video yesterday, although I haven't gotten an email from them yet. So if they're watching out there in Streamland, you get your email in. I got to get your code. Come on now, I'm trying to do a giveaway. Yeah, I know, right? So anyway, yeah, we do have a quick start course and all that fun stuff, but if you really want to dig in like the Academy does, you're looking at about 19 plus hours of video course material. Alongside that, you've got homework, study guides, all kinds of things along the way. And that way we can really make sure that you're understanding what's going on while you're navigating the course, which I review personally. And you get the DTA upgrade discount too, which is also incredible. Then there's the top floor, the executive suite. That's where you're going to find the VIPs. VIPs have permanent access to all that is SSFTG, the Day Trading Academy, private Discord chat, future updates. Sorry, futures. This is a automatic vocal response there. Future updates, new strategies, monthly webinars, one-on-one access. We actually have our monthly webinar coming up, I believe, this weekend. And everything else that comes along with it. It all comes as part of the package. VIPs gain access to the fully dedicated, non-delayed stream the entire session, meaning that they're on the fastest connection you can get without any delays from start to finish. So whether you're here for the very first time or you're one of the VIP vets over on the dedicated stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at some news, take a look at some charts, see what's going on here, then we can rock and roll. Redraw, no reply in 48 hours. Yeah, you gotta have I might have to do something like that. Like we might have to have a drop dead period on the giveaway. Like after a week or something, we'll have to do a redraw. I don't know. I can't have a giveaway and then not give away anything. That doesn't work that way. Anyway, so don't forget to grab your morning DP levels. Those are posted for you this morning on the Major 7. NASDAQ, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. It's a race every time. Don't forget the news calendar as well. That'll give us a heads up as far as what's going on. The news calendar really kind of light. Again, 8:30, we've got the building permits. That was forecasted at 1.7. And we really don't have anything else today. The next thing that we have is the API report, which is this afternoon at 16:30. So, as far as news is concerned, this API is super useful, especially with what crude's doing, bouncing all over the place. Now, this morning, dropping massively down. I'm going to be very curious to see what this API comes out as, because that's going to be that could be a pretty big heads up. But as far as news is concerned, there's nothing. We really don't have anything to worry about. So let's get that out of the way. Take a look at some charts here on the NASDAQ. We'll wait for the NASDAQ. On the S&P, on the 15-minute, we did have that ginormous dive to the downside. Really, on the 15-minute chart, it's tough to kind of see where the value pullback would be from this perspective. Because if we're looking at the top down to the bottom, the last biggest pullback we had was 1.69% or so. Hang on one second. So with that kind of mentality, then doubling that down, right? 1.7, basically around, take that times 2. So we'll take this over here off of the top. And you're looking for that value to double down. And that is, lo and behold, where the market found support. It's almost like we just did a video on this not too long ago. Re-upload, huh? This is the type of thing that you really got to be paying attention to when they start breaking through this first value pullback. When they start breaking through that, the next biggest one, the one that everybody's watching for, the value dip, the value pullback, and buyers weren't, the first time it hit it, it bounced right off it to the tick. So there's very obviously some supportive bouncing going on here. The thing is, if we look at it from the bulls case, they had an actual risk perspective, let's say of down to about there. They've already hit all of their targets. So, the market doesn't have to go all the way back up. That's not what this means down here in the double value pullbacks. A lot of traders, because of these areas and given the bounces that you can get off of these, typically back up to the highs, these are the ones that you want to try to get a runner on, right? Like if you're going to hold on to a runner on anything, those are the type to get, because those are the ones that can have the potential of rolling all the way back up to the highs. But the same thing persists. What happens if a double value breaks? Now what, right? Well, if a double value breaks, then you're usually reaching out to a larger value pullback. It's similar to when you have three legs in a move, right? If you've got 1, 2, 3, yes, there are 3 legs there, but typically that is usually more reminiscent of the fact that you've got 1 and 2 built in there somewhere else. And it might not have to be stacked like that, but it's an implication that something bigger is taking place. So if we do start breaking through the lows and cracking below like the 4220s, then there's a pretty good chance that we see some further slide to the downside. In order to see where that's going to go, you've got to zoom out a little bit further. From the 60-minute perspective, the only other point of interest would be right back to where the spike in channel, although nasty, it does fit, where the spike in channel starts. And that's right at around 4,200. That's where the market loves to go. It loves those 4,200s, the right at the beginning of the spike in channel. That's a structurally perfect zone of interest. We were talking yesterday, though, how this is a really kind of wonky move, especially on the NASDAQ, how the spike in channel doesn't fit as well. Now that we're getting a bit more info and we can line it up on the top, if we categorize that on the bottom, you can see this doesn't fit as a perfect spike in channel. This is more of like a spike in wedge. And if we figure that, well, then realistically, this creates a downside potential all the way down, maybe down to new lows below those 4140s, 4120s. There's some serious potential here, but there's a lot that's got to happen for that to take place. This could easily become a V bottom, and we're all the way back up to all-time highs today. It's not the first time that's happened. So if we look at the 15, though, we are seeing some very obvious value bouncing. If we look at the volume on the way down into that area and continue it further, got the POC still up at the top. That hasn't changed. So, okay, that's a little bit of a clue. The buyers do have a nice bounce, but they haven't proven enough to actually reverse the market. Makes sense. It's only the first bounce. V-bottoms usually aren't going to go without a fight. So, they might not be able to get the POC, but if the market does rally higher without the POC changing, then 43.53 is a massive zone of potential resistance. And if they break above that, then it's game time. Over on gold, finally getting a little bit of movement, I guess. If we're looking at the overall volume perspective from top to bottom, we had that the POC that was built up. come on, was built up back in the 1806s. And that POC is the impulse, right? That's from the bottom all the way up to the top. And with the market pulling back to that impulse POC, that's not, it's a non-confirmed POC in a sense, right? Because this could roll over to a new low. This could continue back up to a new high. We're not quite sure yet. But generally speaking, when you see supportive bouncing like this, where it kind of fades underneath it and the sellers came in, then when it chopped back above, the buyers came in. When you see that type of respect there, there's obviously something going on, right? So that this whole 1806 to 1800s to 1810s even, this whole area is a big zone of interest where buyers are trying to buy in. And it makes a lot of sense. If you look back at the previous range lows, the market found a bottom where? Right around the average of the range lows. There's a lot of things that are making sense here, but now that we're back above that POC and rising higher, the next big thing we have to make sure of is, are there any sellers in the way? And if we look at this from a breakdown, we just broke above them. So, no, there's no sellers in the way. This is clear, clean and clear and out of control all the way up to the highs. Is it clean and clear and under control? Whatever it is. That's an old commercial. I don't even know if they still do that. Yeah, 1 sec. All right, over on crude, we've got some nice sideways action going on after the market has an attempted drive lower. If we're looking at this drive lower, and I say attempted because we really have to kind of prove what's going on here on the bigger picture. This type of move down is from a bigger perspective, right? That's just plain and simple what it comes down to. When you've got this big of a move, something bigger is happening. So with that in mind, we've got to kind of zoom out a little bit and see, well, what could they be trying to reach out to? What objectives are the sellers trying to accomplish? What are the buyers waiting for, right? Where are they trying to come back to? And if we look at this overall move from and actually we might have to go to a 4-hour chart. Hang on a second. We get a couple more days of data in here. Jeez, we're already out to 120. Okay, let's go. Let's go 150. Okay, that is an actual confirmed bottom. Good enough. So as far as what could they be hunting for, let's look at it from a volume perspective, from the way far out here. And before this thing starts loading, good Lord, switch it over to minute. There we go. We've got some problems. There's some issues here for crude oil as far as where the volume was. It should stand out as pretty straightforward what the market is looking to try to reach out to do, and they're trying to reach back to volume. The problem is the last volume was at 58.68. They're going to have to shed some bucks on the way down here to hit that area. The other side of this, the other consideration would be something along the lines of coming back into where there were some previous minor accumulation, right? It wasn't the major accumulation, but it was the minor. And that has a pinnacle point at around 62.75, 63, just eyeballing it. So, I mean, we've still got open room. There's still plenty of space to the downside for this market to continue falling. And if we're looking at it from an Elliott wave perspective to ensure trend and to kind of see, where are we? If we're going from the bottom, we've got this first drive up. We've got the next drive up. That pullback was not, that was too far. It pulled back way too far. That doesn't work. So as far as this continuation up, it would have to be satisfied with this little bitty pullback here, and I just don't necessarily believe that's the case. So the one good, very, very good thing for bulls that they have going on here is that as long as this continues up, this could just be wave 3, which would be then looking for wave 4 to a new high. The caveat to all of that is that they cannot break below 6150. If they hit that, it invalidates the entire thing. So they need to hold this minor accumulation, because if they can't, then 58.68 is next. That's what it comes down to. So it could be, man, I mean, it feels like you're catching knives, but, well, how do you expect to catch a low on a bottom with a V bottom if you're not trying to catch a little bit of knives? It just makes more sense to try to juggle when it's down in the 62.75s. Over on the euro, we've got this back on the 60-minute chart because, again, it's not really moving that much. I might end up replacing the euro and just dropping this thing and swap it out for something else. I've been having people asking me about the bonds. Maybe we'll do that instead. I don't know. I know a lot of people still watch the euro, so but geez, having to I've left this thing on a 60-minute chart and it doesn't look like it's done anything. This thing sucks. Ugh. Anyway, with my temper tantrum out of the way. We've got the bear wedge that's working its way to the downside. It's not really doing much other than grinding its way lower. We're still in this drive to finalize the move. Finalizing the move, where could that be? Well, one very obvious thing that stands out is this gargantuan swing gap to the downside. That should stand out as a sore thumb, right? So if we're looking at that area as far as downside objectives, that gives us downside objectives, which are actually incredibly difficult to see. Hang on. Let me do it this way. If I go here to there and do 1 to 1, that should give me the measure I'm looking for. Yeah. And that gives us downside objectives on the euro of full completion at 1.17 rather. Geez. Big difference. 1.17 basically is the downside objective for this move. So is the downside done? No. We're probably going to keep grinding away. It's still working its way lower. It's just kind of gross and messy. It's what we have to deal with at the time being. Still potentially looking to replace the thing. If you have any markets that you'd like to see instead, maybe throw me some ideas. We've got the Bitcoin market next with a nice slide to the downside, breaking through 30,000 and dropping back and continuing lower. I mean, this isn't a surprise, right? Lower highs, lower lows. This thing's been falling for, I don't know, since June. When was the top of the range? 29? And it just hasn't stopped rolling lower. So seeing this break down to a new low, again, like, oh, wow, like, whoa, what a shock. The thing that we really need to see here from Bitcoin in terms of breaking down and breaking away from this, because this is the zone of interest that we were talking about. We're underneath this major inside low. A lot of swing traders buy these areas because they can put their stops under the low with targets that are way back up at least to the last range high. And that's an incredible reward versus risk. You're looking at, just eyeballing at 3.5 to 1. So the probability of something like that succeeding is obviously garbage. But it doesn't have to be very high in order for the trader's math to work out favorably. So it's fine, right? It fits. So buyers will take this over and over and over and over again because they know that in the long run, it's a profitable strategy. That said, it really is a bummer getting hit in the face over and over and over again, just trying to catch the knife while it's falling. So the next approach then would be backing the train up a little bit and saying, okay, I know this is my zone of support, but one typical thing that happens almost always is that the market will break underneath it, go back up, hit it as resistance, try to go down, probably, and we can see it bouncing off settlement, right? Build the story. Bouncing off settlement, breaking back up, going maybe to the positive 1, maybe. But what makes more sense? The positive 1, we might have that previous range acting as resistance. Maybe that's where we get the breakout and then the pullback. That makes a lot more sense to buy over here after 3 higher lows. Right? So we've got a lot that needs to happen yet in order for this zone to really take place from traders who are waiting for info. And then over on Ethereum, breaking below the 2,000 mark, staying underneath the 2,000 mark, dropping underneath, and now into the 1750s. The 1750s should sound familiar. This is a very big area because, well, if you look backward, this is that massive swing low. Now, this one's a bit of a different beast, isn't it? That swing low underneath, it's not too much further away. So in terms of, we might have to go even further out to see what the next swing low underneath that would be, but this would be an incredible reward versus risk. If they're buying here and their stop is underneath this little bitty low and their targets are even back to the previous range highs or swing highs, that's up back at 2,000. It's like a 7 to 1 and it's nuts. So, buyers will take it for sure. Long-term Ethereum buyers looking at this dip, again, we'd have to zoom out to a larger time frame. But so far in the faster time frame on the 15, it's still lower lows, lower highs. It's still grinding lower, is what it is. Until that stops doing that, we can't be buyers. Oh boy, look at the chart on the NASDAQ. Hot diggity dog. What a chart that has blessed us this morning. Wow. Ooh, man, I really am looking forward to today, because usually when we have this type of consolidation, I know I'm being totally facetious, but seriously, when we start the morning like this, usually the rest of the day is explosive. So it's kind of exciting. I'm just hoping that the explosiveness takes place around the open rather than at like 11 o'clock. Fingers crossed. If we're looking at the daily chart, that bigger pullback that we were talking about, we did dip down to 3.67. So they got back to a 3.67% pullback so far. It's close to a double value. I mean, the last one, what was it, 1.7? I think it's tucked behind there, 1.17. Yeah, I can't really see it. But that was the kind of the last, let me delete that. Yeah, 1.73. So it didn't quite, equal out perfectly, but I mean, basically good enough. 3.67 double value pullback, a small double value pullback, but a double value pullback nonetheless, just on a daily perspective. Remember, if you're going through those larger value pullbacks on the faster time frame, you're probably dipping to a larger time frame. And that's what we're seeing here. We're dipping down. Now, here's the concern. We have 3 bear bars right back to back. That is a problem. That is a big problem. Because the last time, and every single time that we've seen 3 bear bars back to back of pretty decent strength, it's followed through with an incredible correction of 8 to 13%. Typically, at least once a year, there's usually a 10% pullback somewhere along the lines. And maybe that was the case in May. Maybe they got the job done a little bit back in March. Maybe it's already done. Maybe it doesn't have to happen again. But realistically, it makes a lot of sense, Now, this first value pullback, the one really nice thing that I do like about this dip is that we're coming back to some of these previous areas, and you can see why I would like to go just a bit further before we start seeing the sellers stop. The problem is if they go a little bit further, then we're really kind of solidifying what happens historically, and that is that larger drop. The larger drop puts it right back here in the 14,000s. That would be a major psychological retest of the 14,000s. That's a big spot. So if we look at the volume all the way from the bottom to the top, there should be something that might haunt you in this. If we go back, oh Lord, let me switch it. Go to minute. Okay. Whew. Does this give you any eerie feelings? It should. Because guess what is back at around an 8.91% pullback? Uh-oh, we've got a POC down at 13,904.75. Things are starting to make sense. If these were sellers who were trying to short the market back at the previous highs, assuming that we are going to be a lower high drive back down, they failed miserably. They did have a chance to get out of break even. Remember, they did have a chance to get out of break even, so it does not have to stop here at 904.75, which further increases the probability of a slightly bigger drop. But at least back to 904.75 is what would make sense right now. Which, it's a bit concerning, but at the same time, it's also kind of exciting. We might finally have that value pullback to re-up on the longer term portfolios. That's a nice little dip. If we're looking at the 60-minute chart on this wider drive to the downside, although they didn't quite make it up to a 0.37, to be fair, they also dove further down than we were expecting. So as far as that continuation down, if we narrow this in, all of a sudden, it's starting to make sense. A 3.8. So what do we have? We've got wave 1, wave 2, big strong breakdown. Wave 2 was very nice and simple. What does that mean for wave 4? It's probably going to be a freaking train wreck. But the inevitable objective is that it makes a new low. So it's probably going to look like this. That's the expectation right now. So, I'm loving the way that the downside looks, but here's my concern, is that we do get that scenario to happen, and this dives down really aggressively at the open, false breaks the low in the sense that it doesn't even break it, but gets close, ramps up, gets sellers involved, tries getting them in, fails. Now it starts getting bulls in, but they fail. Then we see sellers coming back in, they fail, and we get this trapping back and forth until they finally get the objective and reverse back off. I don't want to deal with this. I want this. So this morning, if we do start seeing some aggressive selling pressure, might be a bit on the aggressive side because I don't want to get stuck in the latter part of this. We'll see how they respond as far as things go. But if we're looking at the all-time highs back to where we are now currently, get this off a tick so the poor thing will load. There we go. And put that all the way further forward. We've got a POC, which is back at 14,773.75. So the bulls do have a case, right? I mean, this is a nice strong leg to the upside, and by no means does it have to stop now. Remember, as long as it stays below the bottom of wave 1, 2, then we're good. That means that they can go all the way up here and still be totally fine. So, like I said, this could be a mess. That doesn't exactly give me any hope. As far as the morning session goes, we're very obviously in a range, but I would much rather be a buyer at the lows of the range, which is where we are now. The consideration obviously is that if it does start breaking down, we've got that potential to dive all the way back down to where it was before. If we're looking at it on a confirmed POC basis, in terms of where the market may want to stop on the way down, the likely area is 475. That's a real bummer. That's pretty far away from where we are here if I'm trying to buy the swing lows as a range buyer on the lows. The probability just is not in my favor at all. We might have a shallower POC, I guess. No, it's in the exact same spot. So there you have it. As far as the market structure goes, we do have, actually the low is back here. Ooh, that's gross. Okay. Let's go back a little ways. The POC didn't change. All right, never mind. So as far as this movement is concerned, this is more likely because we are breaking in now to the previous one on the larger side. This is more likely an ABCD corrective phase that even if it does go back up is going to have a difficult time at the highs. It's just not looking good to be a buyer right now. It doesn't make any sense. A lot more emphasis to the downside at the moment. We'll see where they want to go, but next time slot is going to be at 928. That's the next big zone of interest. We'll see what they're able to get done then. For now, though, I do really like the idea of shorts. It's so far down already. We're kind of late to the party as far as the 3 lower highs and all that. It's either it breaks down now and falls away, which again is going to be the aggressive side, or it false breaks the low and then tries to go higher and then it's a mess and ugh. We'll see. Right around the corner, 928 is next. That's the next big time slot. Should see some movement around then. Hopefully. Even the short-term POC is... Yikes. And here we sit as we go into the open, a minute and a half away. Man, looking at the 500 tick on these candles, this... Oh, man. Oh, man. This could be interesting. Fingers crossed for that hot volatility drop. If we're looking at it from the lows, we did have a pullback, which was an L5. Typically with L5s, you're looking for an L2 pullback, and guess what we just bounced off of? So, I mean, the bulls have a case. Plain and simple. They've got a case. But where's the 2-to-1 objective? If they bought the top and they used a stop at the bottom, their targets are right at the top of L1. So they don't have to go back to a new high. But buyers are buying the residual L2 after the L5 low. It's following what it's supposed to be doing, at least. We'll see if that changes. All right, 9:30 open hits. The S&P fills its gap immediately at the open. Man, they had to have done that on like a nanosecond tick. If buyers are going to resort to picking up this L2, we will see them buying into this pullback. The POC for this entire move is currently down at the bottom at around 6, though. So if sellers are short and in the profit, well, they've got downside objectives, at least from a scalper's perspective, that, well, technically, I guess they've already been hit. The only other one would be 2-to-1s, which is way down there. Oops, that's not the one I wanted to delete. Oh, that's fine. It's all in the same spot anyway. Bears trying to rotate back to the downside again. Remember, excessive bearishness at the open is likely going to see some responsive selling pressure. I'm going to look to follow along with this bear pressure down. This is looking really, really pressurized for at least a nice little dump. Good bearishness, beautiful flush. Oh, yeah. There we go. Stepping on the gas pedal a little bit here. More continuation to the downside to the lows is going to be the next objective. Let's zoom in real close here. Nice breakdown through the lows. I was only able to grab one. Good balance at the base. More continuation down. Be careful down here. We're starting to run into some potential support. Structural support on the base here. They're underneath it. Sellers are going to want to see that hold its ground. If it fails, that's going to be a problem. More continuation down. Actually held as resistance. Notice that inside wick holding off of it. More continuation to the downside. Sellers still showing aggression. Remember, it's going to feel awkward to be on the gas pedal like this, but we've got major objectives to the downside that are still open and waiting to hit. Bears are continuing this drive to the downside. There's no pullback at all. More continuation down. Nice little pulse back to the upside, snapping above some of the previous candles. Now, a lot of sellers are going to chase into this, which gives this potential to pull back a little bit further. So I would like to see this dive down with more bear bars and continuation and really get this flush lower for the kind of finalized move, if you will. And if it can't get that job done through the base, then we might be looking for a pullback back up towards, I'm going to exit, towards the base of that wedge. Oh, geez, good exit on that one. Golly. Just feel that bullet skim the hair off. Jeez. Show another bear bar. We still have the gas pedal down. Sellers will be building into this short. Right? Remember, this is looking for some big downside objectives. Oh, I didn't get... Okay, I got to fill. Retesting the base of that area. Beautiful flush back down. Gorgeous retest. Fantastic bear bar. Back up a little bit. Come on. Nothing? Okay. Another really nice follow-through bear bar. Trying to get a fill on this retest back up. Nice pop back higher. Pushing back up into the top of that wedge would be the objective area. I'm holding off on the 1 in the event that it doesn't want to really pulse. All right, exiting back down. Bad entry on that one. I'm just going to accept the fact that it's not going to drop for me. See if I can get a better one. Might have chased it a little bit, but honestly, I feel like the reasoning behind selling another bear bar there made a lot of sense. I think I just held too long. We've got more continuation down, getting a little bit choppy at the lows. Oof. Quick little pulse back up. Sellers with a very strong bear bar to try to get the drive down. Now, sellers know that a lot of traders are going to be quick to hit the gas pedal on this one, so having it back up, they'll exit quickly. If they're looking to fill their coffers with contracts, that's what they're going to do it on. Retesting the break-even point underneath. Starting to pressure back into the wick. Sellers reloading into the move so far. I didn't get filled on that retest at the highs. I'm going to reduce a little bit. It's starting to get jerky, which might mean that it wants to get a quick little snap higher or not. All right. If that's not going to get the sellers in, I'm a little bit concerned. I'm going to jump ship on that. They might just be re-upping into another move to the downside, and if that's the case, I'll be more than happy to sell again. But all right, they're re-upping into another dive down. Weak bull bar back up, looking for sellers to repressure the downside. Very nice potential drive here. Sellers hitting the gas pedal. Oh man, there's a lot of pressure. I'm going to reduce again. It's not giving me favorable points of interest, but if we can start retesting this area, I still really like this dive down. But we've got to be careful because the volatility is incredibly high. A really nice bear bar. I don't mind worsening my average for a bear bar like that. I'll accept the risk on the additional contract if they want to try to pressure it again. But that's a really nice potential. Retesting back into the wedge again. That's where all the sellers came back in. Jeez. Holy crap. They all slam that bear bar back to the downside. Trying to pressure the move back down again. But bulls are trying to kick it back up. Downside objectives are still waiting. Retesting the wedge again for another continuation press. I'll reduce a little bit on this continuation, but I still really love this potential. It's looking really nice. Good drive to the downside. Any bulls who potentially tried buying a breakout to the upside aren't going to want to see these continued bear bars. I'll look to sell a bit more on this pulse back up or retesting that zone of resistance once again. Beautiful continuation down, starting to retest kind of a POC area and modify it a little bit. Testing break-evens again. A weak doji. Starting to pressure back through, trying to get through the POC at the 555s. Whoa, big bear bars. Big bear bars. Follow through. Keep going. Keep going. More selling pressure. Now we're underneath the POC. Quick kind of desperation pulse to the upside to grab the POC. Failing back down. Selling again to the downside. More flush. Come on. Break through the base. The bulls are desperate. You see that final reach? Like, no. There's the dive. Fantastic. Boom! That last desperation grab, like, please let me out. Oh, I love it. Fantastic drive to the downside. Messed with me a little bit in the middle there, but you could see they weren't quite ready to give up on the sellers, and neither was I. Would have been nice to have a little bit more on that drive down, but overall, fantastic move. Jeez. That's it. You're done for the day, JH. Yeah, I know, right? 9:38. Ah, done. Dang. Let's see the first 5-minute volume perspective here. See what's going on. Volume is still heavily weighted at the downside. It's at 555, which I don't think is much of a surprise. Very nice continuation lower. Kind of. I mean, it was a little bit vindictive in there, but okay. Sellers trying to get a little bit of back and forth. I mean, they will sell at the lows, but talk about nerve-wracking, right? After a big drive like that, it's likely going to at least try to get a second attempt. The problem is I'm a human, and if that second attempt happens in a microsecond, I'm not going to have time to respond to it and actually get a fill, which is actually what just happened. That's exactly what I'm talking about. This kind of crap happens all the time on the NASDAQ. Like, I know that this is a good trade for a scalper, right? I'm not dense. Like, I understand. But you got to know when you're beat. You know, I'm not as fast as an algo, and I'm not going to bet against them. They're faster than me. They pay billions of dollars to be faster than me, you know? It's like, it's just not worth the risk in the long run. I've seen way too many of those bottom-weighted ones just get dumped on, just like that. In hindsight, it's like, oh yeah, that would have been a great scalp. Mm-hmm, sure. Getting a little bit bottom weighted here. 555 still the volume average. 606 still way back up at the top. Downside objectives wide open at 475s. Still have that reasoning to want to be short. The first, look at the first 3 candles on the S&P. Like, what is this? What a mess. Well, let's see what the first 5 volume is, I guess. It's at 26. Bulls are winning right now on the S&P. Let's modify it forward, see where they're at. 59. Bulls are still winning. Yeah, we might be closer to the bottom. Tough to say that in the face of these bear bars, though. Sheesh. If we continue the POC to the downside on the NASDAQ, it shifted down just a little bit, and it's still way up there. So I have to believe that shorts are still short on the NASDAQ. The S&P is starting to make me believe otherwise, but the NASDAQ, I still think shorts are short. Or at least I don't have a reason to disprove it. Or disbelieve it? Whatever. Hey, Ace, how's it going? Adam, Steven, everyone else, welcome. Glad to see you. Glad to have you. Got a wild day so far. Yeah, I don't blame you. I think the S&P is definitely poised to try to get that pop higher, and being long right around that POC makes sense. Not seeing it quite yet on the NASDAQ, but that would be a huge help for the S&P if the NASDAQ could flip the script. Get a POC shift down. That's kind of everything out of the way. Can't figure out the schedule. Every day from 9 to 10 is the morning room that we do. That's like on the just open on YouTube for everyone. And then from 10 until we end the day, so 10:30, 11 o'clock, depends on what's going on, is for VIPs and extended session members, like on the YouTube members, etc. That's for them. So we can do like Q&As that are a little more in depth, all that fun stuff. I know there's a subscription. I'm too cheap for that. I feel you. I feel you. It's a cup of coffee. I mean, yeah. I feel you. I'm cheap. It runs in my veins. That's why I like having both options. You've got the morning session, which is open to everyone. It does have a little bit of a delay, obviously, but my spirit animal. It's Mr. Krabs, the penny pincher. Did you see the I don't, maybe it's just because I have kids, but the penny pinchers event where they like try to steal the whole hotel room? Oh, SpongeBob. Got more continuation to the upside. It would make a little bit more sense to see an ABCD correction back up. Something along the lines of back to those 55s would be the 5-minute POC retest. 1-to-1's a bit further up. Doesn't necessarily have to go that far. We haven't reached down to the major POC. You don't drink coffee? Oh my god, I don't know if I could function without caffeine. which I know it's like heroin. I totally understand. It's not good. But I figure there's like caffeine in an apple, so just like times it by 100, put it in a drink, you're good. It's all natural, right? Taurine, it comes from a cows, right? Good enough, natural, totally natural. Nice sell bar back to the downside. Sellers looking for a continuation pulse on this move. With the bulls failing that pulse to the upside and failing with basically a one-tick miss, I'm going to keep the risk light because we are relatively far down here, and I would like that two-legged correction back up to 555. But if they're going to drop back down, this is a nice spot for them to try it. Coffee is life, yeah. Yeah, that smell of coffee in the morning, man. Even if you're not a coffee person, you gotta love that. Not so sure coffees and apples are the same. I mean, apples and bananas, you know? But, I mean, it's the same thing. They're all edible. Still no pop through the top. I'm not willing to commit more to it. I will there, though. Nice pulse to the upside for that ABCD corrective phase back up into the... right back into the POC. Nice zone for sellers to try to re-up for another drive down. At least with foods, yeah? Starting to question my decision-making skills. Yeah. Hot Cheetos and meat sticks. That's a good lunch, right? It's good for you. Starting to pressure back up to the top of this area. This is where I couldn't get a fill. This is where earlier sellers were starting to come in. Jeez. That's a way to describe it. Golly. Tastes like they burned a field of hot grain and yeah. You gotta get the good coffee. Nice zone of resistance for sellers to be pressuring back. And if longs were long, this is also a logical point for them to be taking profit. So it makes a lot of sense. Plus, it helps the average to the upside. If they are going to create a larger pullback for sellers to transition down, being above this swing high, I would like to try to work my average up here a bit more if that's going to be the case. But we've got to give it some time yet. All right, more continuation to the upside. This will allow me to get my average just a bit further up. S&P continuing to climb. Bar, what was that? Bar 3? Yeah, bar 3 was a bull engulfing bar, although they're engulfing a doji. But still, nice pressure. We've got the POC, which is way down at the 540s. So as far as a return down to the average from a scalper's perspective, I mean, there's still more than enough room there. But I'll reduce a little bit with the assumption that they might not be able to make it all the way back. This does look like they might be trying to gear up for a 5-wave up, which would imply another leg higher. If they want to just dive down, then it's an ABCD correction. Should go back to the lows. I still want to be short, but again, I'm trying to get my average up to where I want it. Now, doing that did a lot for my average. If the market begins to break away above this, we have to be realistic. The next objective, 14,606. Speaking of VWAP, do you not use it? I like the VWAP. I like the VWAP more on stocks. I think something that has, or like if I were using an RTH on the S&P or the NASDAQ or something that has a definitive session, I like the VWAP a lot more for. It tends to be a lot more reliable because obviously trading outside of those realms is more difficult. So I do like the VWAP. I just prefer them on equities more than I like them on indexes. And that would answer the second part of that. I like them on RTH. Looking across the board while I'm waiting for the NASDAQ to do its thing here, we are getting a continuation back up above those 14,555s. And if we're looking at it from the 15-minute perspective, it's starting to show that inside swing low holding, which, I mean, if we're starting to close out bull bars that look like that, then the opinion of the trade begins to shift. Rather than trying to get this to roll back down to new lows, retest the value down here at the very least, it's starting to transition into, all right, time to start bailing, it's time to start getting out, that kind of thing. So we're not quite at that point yet, but I've got my average in a point where I really like it, especially if it wants to dive down from here, even from a 2-to-1 perspective back to the lows, has a huge amount of room. So from the bulls perspective, if they are basing it off the lows, although the swings are small, we've got an L3 into an L1 breakout, which was the last pullback where I exited the last one. The next one around is going to be around an L1. If they fail L1s, it should be in the L2. So it's still down around the scalpers territory, which makes more sense. But if they can start breaking away below, it's a phenomenal placement in terms of swing objectives to the downside. See if we can get a bit more downward momentum into like the 56s, 57s. That's the beauty of the market, isn't it, Steve? I still don't think the bulls are done, which is why I'm still transitioning out of my position and trying to keep it small. I love where my average is, but if there's a reason to believe that there's going to be another leg higher, then I've got to hedge my bets. Until they make a scalper's objective to the downside from where it's at, I have to assume that sellers are still building. Starting to reach out and grab sellers' scalpers' objectives, so I will lighten the load there. And now my position average is in an incredible location to try to see if we can ride this back down to the 540s at least. I've only got the one, so I'll look to add again for another one, but I'm still going to try to keep the sizing small with the understanding that they may get another leg up. POC is shifting, which potentially demonstrating sellers are doing the same thing. It might just be buyers taking profit. I mean, either way, it doesn't really matter, I suppose. Ace, the difference between RTH and ETH, RTH stands for regular trading hours, ETH is electronic trading hours. So the difference then would be from 9:30 to 5:15 or the new hours versus electronic, which would be basically just the entire day. Nice continuation down. I'll look to re-out there, which is why I added that additional one. See if you can get that real nice drive back down, though. The POC has shifted up, so the seller's got a shot to really tank this thing. They're below the POC for now, But if the sellers start losing their grip down here, which is why I'm still perpetually exiting these trades, I need to kind of hedge the bets, right? If we pierce back above the 570s, the shorts are going to start getting out and the longs are going to begin taking over. Based on the ES, couldn't help but go along on the NASDAQ. Unfortunately, it doesn't always work out. Yeah, and, you know, that's when you're doing something like that, when it's based on a pattern or something along those lines, use high reward versus risk. Offset the probability. It's one of the best ways to do it. Nice bear dive down. I don't want to see the bulls sweep this back up, though. Okay. 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 Nice bear bar. Now, was it a trap? Beginning to go bull engulfing. All right, I'm going to reduce a break even. I tried getting out ahead with a quick 10, 15 ticks, but it jumped right up to break even. No time, get out. We've got 4 minutes until the open. Overall, between the end of that, basically, not really much. It's just kind of a mess inside there. You can see they tried really hard to get it going, but they're going to have to reprove some things. You saying if the POC is below the trending market, it's most probably bullish until it's shifted. So the POC, and there's actually a video that's coming out, I believe, soon, that's going over like directionality as far as POCs. I don't remember when I recorded it. But the idea is when you're taking a look at a POC, and we can finish the day up on this because we've got 4 minutes until the end of 10 o'clock anyway. So get those training questions in. We'll get those covered real quick, and then we'll kind of rotate into the extended session. But as far as the POC goes, like, there's several different types of POCs. There's the impulse POC, which if you were looking at a market that was moving around, and it was doing this, right? An impulse POC would be measuring from the bottom to top, or from the top to the bottom only, right? The literal impulse. You're measuring how the market responded to a specific move. Can be very important information. That's one type of POC. The market can be above or below this, though, because this is considered a developing POC until the market confirms a new high or a new low. Once it confirms a new high or a new low, then we have a confirmed POC. Then we can measure the whole thing out and say, yep, from bottom, or, you know, from bottom to top, back to bottom, and then back to the breakout of the highs, this whole distance, this would be a confirmed POC. Or just from, well, I deleted it, but just from the swing high to the swing high, or the swing low to the swing low, but it's more confirmed. And because it's a confirmed, solidified, set in stone POC that cannot change, that's one that I would say, like, if we're under it, we can't be bulls because we're under this POC. A developing POC, however, which is what this would be. If I were taking the stance of a bear, my assumption would be that it's then going to make a new low. Therefore, until this makes that new low, this is a developing POC. At the moment, price is under this developing POC. But if we were to back this up over here, the market was under a developing POC here too. Developing POCs are useless unless they help you in the larger context. Now, they can trigger entries. Like if you see a developing POC and it just doesn't move, like there's just that one point where it's just not moving off of it, then yeah, you can treat that as an area of resistance or support. But understand it's still developing. It could change. And so therefore you have to approach it with a high reward, low risk standpoint, low probability. So there's a lot of different types of POCs. There's the confirmed POC, the non-confirmed POC, the impulse POC. But generally speaking, if it's a confirmed POC, then I'm 100% paying attention to it. As an example, back here, this, after it broke down, paused, made a new low, was a confirmed POC in the short term. So I'm going to pay attention to that area. When it doesn't work, I'm going to pay attention to that area. You see what I'm saying? It's all there. See? Price was below that POC. What happened? It's a developing POC. Now, from the bulls case, what do we have? We just had a rally up, a pullback, and another new high. We have ourselves a developed, confirmed POC. Up to that new high, at least. Because this is proven. They can't take that back anymore. That's from the bulls' perspective, though. From the bears' perspective, this is still developing. From the bears' perspective, they're underwater, but it's still developing until it makes a new low. Now the new low would have to be under here. That might change things a little bit, but you get the idea. You can draw them up any way you want, but the important thing is really understanding what they're telling you and how easily or non-easily they can change. So we are at 10 o'clock. Let me get the last question here. How do you feel that that we are bear flagging under 30,000 on Bitcoin? I feel fantastic. That's incredible. I've been waiting for this forever. Like, yes, please. I mean, don't get me wrong. It sucks. Like, nobody likes being underwater. That's a massive bummer. And having the market pull back against you from whatever the high was, almost 70,000 to now under 30, that's tough. You know, that doesn't give you the warm fuzzies. But at the same time, you know, from a long-term perspective of someone who's trying to buy it as an investment and hold on to it for longer than a couple months, this is an incredible opportunity that is finally dipping back to a major zone of interest. Now, the way that I personally split things up, just so it's full disclosure openness, right? When I'm buying into these dips, and one of the members is actually talking about this not too long ago, where when we're buying into the dips, it makes a lot of sense when you go like halfway up, a scalper's objective, to reduce your position a little bit. Take 20, 30, 40, even 50% of the position off. If it backs up, then you can re-up into the position and you can kind of keep that train going. But, you know, that said, that's, you know, where we are now, the fact that it's dipping, there should have already been profit taken. You know what I mean? From that mentality. I mean, it went up like a bajillion% from where it was. But on this dip, depending on where traders got in, you just have to have a realistic expectation. The market's still going down. It's still making lower lows. There's no reason to be bullish yet until that stops. I don't think that's going to stop until they get 20,000, like we've been talking about for months now. If they get 20,000, you better believe my eyeballs are going to be duct taped open. Right? I'm not going to bed. Where's my buy button in one of those perpetual water dog bird thing? Just keep poking the buy button. All right. Anyway, we're past 10 o'clock. Let's roll over to the extended session here and see if we can get some more scalps. Yesterday's extended session had a ton of scalps. I'm kind of hopeful that, you know, maybe we have something. But remember what we were talking about this morning. I don't want to get caught in the mess afterward. We had that morning drive down. It may not have fallen to where I wanted it to fall to. C'est la vie. There's nothing I can do about that. But we had the morning dive to the downside. Now my concern is that this is going to turn into a train wreck as we continue further forward. So just be careful. But we still should have some scalpable opportunities. We just have to approach it slightly different. We'll get into more of that in the extended session and all that fun stuff. For the rest of you who are ducking out, though, I hope you had a fantastic trading day. The volatility was definitely there. If you were on the wrong side of that volatility and it really kind of kicked you in the teeth, take a break, first of all, get away from the markets and make sure that you're on a level playing field, level-headed, ready to analyze. And then sit down and don't beat yourself up over it, right? Look at what went wrong. What could you have done better? What could you not do next time that got you into trouble? These are learning experiences if this was a difficult day. If it was a good day, congrats. If it was a bad day and maybe you need some help, shoot me an email. I'd be more than happy to help you out there too. Either way it goes, though, I hope you had a great day. As per the usual, if I missed any questions, you can always shoot me an email, jhb@ssftg.com. I'll get you covered from there, or you can drop them in the comments below. Until the next time, though, we'll see y'all later. And the extended session users, just give me a second here, and we'll roll over, all right? Have a good one. We'll talk to y'all later. Thanks.